Whether the industry can maintain its super return level, so meaning returns above 20%, which was is more or less the target, at least that I know. So can they do that, given that there is so much competition now?
Competition has increased, absolutely. Prices have increased, absolutely. The industry has done well over the past years and has always been innovative enough to keep the high return levels. And we believe that they will continue to do so. Now, they cannot do the same as they did 10 years ago. There are new teams emerging, new topics emerging. You cannot just rely on multiple expansion, on the expansion of prices anymore. You need to work in the portfolio. You need to work with the portfolio companies. You need to expand revenues. You need to, you need to reduce cost. You need to expand margins in the portfolio. So private equity investors today need to get their hands dirty, sleeves up, and really work with the portfolio to generate these returns.
If you talk about like the big topics, I mean, is it also that you're looking out for companies who are just already still lacking, for example, digitalization, and you put them on another platform, and that's how you make your returns?
There are a couple of big themes. For sure, technology, which you're alluding to, is one big theme. This year we expect that 1 in 3 deals is a technology deal, so a technology company that does exactly what you said, supports the company's digitization. That's a big mega trend. A second one is for sure healthcare. A lot of investments go in the healthcare space. This has been the subsector with the highest return over the past years, and it has done very well. Many companies have done very well in the COVID crisis. And the third one, very important one, sustainability. So any company that produces goods or services that help us to have a more sustainable lifestyle, to meet our CO2 reduction targets, these companies, they are attracting a lot of private equity capital, and that's one of the key themes here of this super return, of course.
Let's talk also a bit about the shadow banking aspect and the credit funds, especially in Europe. They have been growing so much in the last, say, 5 to 10 years. So how is that a problem for the industry, or is the industry just doing what the banks should do?
Well, the industry is going where great returns are, and the credit funds have been a very strongly growing sub-asset class in the past years, especially in Europe, as you rightly said. So we expect this to continue over the next years. The classical buyout is also growing, but less than the credit funds, less than the growth equity arena. So for sure, we expect these adjacent equity classes to continue to grow.